we're going to be going over risk management, right? But I'm going to make it super practical for you. All right. Those that come out to the boot camp, I'm gonna have this perfected, but you guys get to be the beta testers. All right. You get the first time that I'm using this particular tool to see if we can make some sense out of what we're doing here. All right. So for my brand new people, I know that we are starting this process. We want to see if we can grow these accounts, right? If you can learn this information and grow these accounts. So the first things I want to do is to paint a picture that one, this is possible. And not only is it possible, right, that there's some math proving that it's very probable. All right, we're gonna make this make sense. So just tell me in the chat if you were to start trading tonight for real, right? What value account are you thinking? I have a number in my head for where I think we're going to land, but just let me know if you were trading for real, what value, what would your account balance be? All right, 200 to 250. All right, 300. I'll take three more. 250. Yep. 200, 200, 250. All right, perfect. So the number I was going to go with is 250. So for the sake of the conversation that we're going to have tonight, everyone on this call has a $250 account. The risk that we are going to take is going to be 3%. All right, it's 3% for the day. What that is going to look like is, sorry, 3% per trade. All right, so we're going to be risking 3% per trade, which is going to look like $7.50. All right, so at any given time, if we take a trade with our $250 account, if we lose, that's $7.50. And we're going to be good with that, right? Because risk management is everything you need to know before you start trading. You make these decisions beforehand. All right, 100%. You make these decisions beforehand and you stick with it. So $7.50 is what we're good with. We are going to be taking a couple steps. All right. So that first thing is determining what our risk is going to be. That's 3%. For the day, let's not go over three trades. All right. So that's going to mean our max risk is going to be 9%. If we lose three trades in a row, we are done. Done for the day. Don't worry about it. Right. We live to trade another day. The next thing we're going to do, we need to determine our target. We need to know where we are headed. For everyone in this beginner's class, take profit one, right? There's a chat within the community called the live signals chat. And that is where we send setups out to you guys. All right. Whatever you see take profit one at, the educators are going to be trying their best to make sure that that take profit is going to be as close as possible to the pip count of your stop loss. If I'm saying some terms that you don't know just yet, don't worry about it. We should be able to cover that as the night progresses. All right. But the stop loss is going to be 3% because that's the risk that we decided on. And your take profit ideally is going to be 3% as well. So in any given scenario, if you lose, you lose 3%. If you gain 3% minimum. That's where we start. All right. Obviously, more than 3% will be great. 6 is good. 9 is better, but for us, we just get that 3%. I'm going to show you why 3% per day on a $250 account can make sense for us. All right. So let me just pull up this chart. Let me know so far if you are following what I've been saying for the last, I think, 5 minutes. Just put an AC in the chat. AC in our community stands for all clear. All right, perfect. Yes, I should pull this up instead. Just give me 1 second. Documents all over the place. I just want to pull up this compound plan that we have. All right, wonderful, wonderful, wonderful. Come on, computer, you can do it. All right, 250. Let's go. All right, so confirm for me that you are seeing a spreadsheet on your screen. If you're seeing a spreadsheet, just give me a 5 in the chat. All right. So this is where we're gonna see what the growth looks like. All right. So here we have our balance, which is 250. We know our risk is 3%. All right. Column C, this is going to tell us if we have a risk to reward of 3 of 1 to 1, which means we only gain 3% per day, what our account can look like. All right. And this is going to stretch for 90 days. Okay. So let's take a quick look. Let's take a quick look here. I want to, yeah, do it this way. All right, so day 1, we're at 257. I'm just going to skim. Day 30, we'll be around 606. All right, day 60, 1400. And day 90, we're looking at 3,500. Okay. This is obviously in a perfect world. If we gain 3% every single day for 90 days straight, that 250 would turn into 3,500. And that's amazing. That is some crazy growth. But let me know in the chat if you didn't hit 300, 3,500, and instead you did about half that, right? That's going to be like 45, right? If your 250 turned into 945, would you be cool with that? Would you be good? Over the next 90 days, 3 months. That's what, March, April, May. Yeah, why not? All right. 945. Obviously, there's going to take some discipline. All right. But we're going to get into that when we look at the examples I'm going to put you through. Yeah. This is 250 US. All right. 250 US. It grew to 917. So let's half that again. Let's say you were what, 25%. You were only at 25%. So that's going to put us somewhere around here. All right. Instead of that 250, you did 500. Because, yeah, human error, right? You're learning. All right. Not every trade works out the way you want it to work out. But hey, this is if it's a 1 to 1. But let me show you something special. As you grow and you go through the academy and you understand things like market structure a bit more, right? Which is in the academy, right? That's to teach you all about that. You're now able to use your education, use what you learned to allow you to gain more. So let's say now when a trade is sent out, instead of just take profit 1, you're now able to take profit 2. That should give you around 6%. All right. That should give you about 6%. So instead of $7, $7.50, you're now looking at $15. Okay. So when we get down to day 30, let's get 30. Day 30, we're now at 1,000. All right. We're now at 1,000. Day 60, 5,800. Remember, when we were going 1 to 1, when we were gaining only 3% per day, we were at 3,500 in 90 days. At 6% per day, we're now looking at 5,800, right? And 90 days, if we kept that going, we'll be around 47,000. All right. I'm not going to do the 9% right now, but I'm just showing you this to stretch what you think is possible. All right. I just want to stretch what you think is possible. 6% in a day, what that's going to look like for you as a beginner, take profit 1 in every trade. If 2 trades came out for the day and you took those 2 trades and both of them hit take profit 1, you just made 6%. Yeah, just like that. All right. So if that stretch your belief a little bit, cool. But remember, the more you learn, the easier it's going to be for you to hit these numbers with some education, right? We're not just guessing out here. All right, so let's move forward into the actual lesson. So we know what our risk is per trade, 3%. We know what our risk is per day. We're only going to take 3 trades. So at most, we're willing to lose 9% of our account. All right, that is the max for the day. We know what our target is. Take profit 1. Take profit 1 is usually around that 3% mark or maybe a little higher. But let's just call it 3% for now. That is our target. But along with that, we need to be consistent and disciplined. All right. So when you are taking these trades, if 3% is what you decided on in the beginning, don't fluctuate. Don't go from 3% to 1% to 2% to 5%. You're going to mess with your numbers. All right. And that's not going to work out well for you. So from here, what we're going to do, I'm going to be showing you a couple things that you're going to learn in the academy. First thing now is the different order types. Why is this important? As you are here within the community and you're taking these setups as they get sent in the signals chat, you're going to be different types of orders that are sent through, right? And you're going to need to have an understanding of it. There are 4 types. There are 5. The first one is called a market execution. What that means is as soon as you're looking to enter the trade immediately, right? If it's a market execution or instant order, you want to get into the trade immediately. After that, there are limit orders. A limit order is such that you're going to wait at a current price. You're going to wait for a better price before you get into the market. So, for my newbies on the line, if we own a computer store, electronic store, and we knew Black Friday was coming up, the price right now for TVs is around $500. We wait for Black Friday, probably we're going to get, I don't know, let's just say 50%, 25% off, a 75% discount. Okay. If you're getting it at a lower price on Black Friday, would you buy the TV today at 500 or will you wait for Black Friday to get it at the discount? Let me know. Those that have been around for a while, you've heard me say this analogy before, but for my new people, I want to hear from you. All right, I just want to tie this stuff together. Right, you're going to wait for Black Friday, right? It's a better price. You get that better price, but why do you want that better price on Black Friday? What are you able to do? As a store owner, you get a bunch of TVs for a lot less than $500. What does that do for your business? Yeah, increase profits, right? If the regular price is 500, you're able to get them for 200. That means when Black Friday ends and it goes on, maybe around Christmas, you could maybe sell it for 6, right? All of a sudden you made $400 profit. Now, that if you're talking in terms of trading, that was a buy limit, right? We were looking for opportunity to buy, but we waited until we got a better price. All right. Let me know if you're following. With a buy limit, our better price is going to be lower than the current price. So that when we buy it, we can hold it until, it's a good time to sell. Right. But the part I want you to hold on to is with a buy limit, we're waiting for a better price. If that is clear, Put an AC in the chat. Perfecto. All right. Perfect, perfect, perfect. Now, a sell limit, right? A sell limit looks like this. We want to get a price, current price is here. If we want to sell, we want to sell at a higher dollar value, right? So a better price for a sell is going to be above the current price. Let's look at it like this. Your family bought a whole bunch of Leonardo da Vinci paintings, right? They came through your family from generations. These are now heirlooms. They've been around for so long, they're now worth a lot. The value of them from when they got them initially is now a lot higher, right? That's now an example of a sell limit. You're not going to sell it at the current value. You're going to wait until the market demands it at a lot higher price. So if it's a sell limit, your better price is going to be above the current price. All right, that's the sell limit. I'm going to be showing you this on screen as well, so it's going to make more sense, but I just wanted to run through quickly before. The other order type is called a stop order. That's going to look like price is currently going up. If it's a buy stop, price is going up, and you want to wait until price passes a certain number before you buy. So let's say you are a collector, right? You collect sneakers, vintage sneakers, and you got like the original Jordan 1s or something. Maybe there are a few of them in the world, right? The value of these shoes was around, again, $500. You tell your broker, right? You got a sales broker. When the value of these shoes reaches $600, sorry, you don't want to sell them because you want to buy them. When the value of these shoes reaches $600, I want you to buy a pair, right? Because for the longest time, it's just been fluctuating. It hasn't really gone above. There is no real sense of that people want these shoes, right? People are only getting them around 500. But you want to see that moment where some crazy person buys it for 600, and then because it's got higher, you expect the price on everything is going to get higher, right? So you're waiting until current price is at 500. You're waiting until it gets to 600 until you buy. That's an example of a buy stop. Sell stop now is going to be the opposite of that situation. Price is already decreasing, right? So again, if you were on the other end of that shoe scenario, you had the shoes. The value of the pairs of shoes was $500 each. And you told your broker, look, if at any point the value of these shoes drops below $300, I need you to get rid of all of them. Right? You have them. The current value is 500. If they drop below 300, sell everything. That would be an example of a sell stop. I'm going to make this make sense on the screen. But for this, I want you guys to have, if you are not on your phone, have a calculator nearby, right? If you could use your calculator app, that'd be great. But I am going to help you with this. All right, let's get into this. For the sake of this conversation, in the next 20 minutes or so, you're going to have $250 in your account. Our risk per trade is 3%. Our risk per day is 9%. And we're going to take some trades. 10 trades are going to come out. You don't have to take every single trade, right? But if you take it, I want you to make sure in your notes that you say which trade you take, okay? Don't cheat when we get to the end, all right? If you took a trade, just let it be. So for this scenario, we're going to imagine that this happened over the space of a week, all right? So when we get to 3 trades, that should be the end of that for the day. If you took all 3, cool. If you took 2 of the 3, cool. Right? If you took 4, then you're well in and your risk management is not right. Okay? We're going to go through this as we go, right? Because this is something, as you develop, you're going to have to know how to calculate your lot size. All right, but I understand this is also new. So we're going to take this in baby steps. A lot of this is just you making a decision. All right, there's not a lot of math involved, but I at least want you to try to use this to calculate this. So our risk per trade. Our risk per trade is not going to change. It's always going to be $7.50. So you can write that down. All right, $7.50 divided by whatever our stop loss is. I have it, it's going to be on the screen. So if the first example says that the stop loss is 30 pips, then it's going to be $7.50 over 30 multiplied by 10. Right? So obviously you would do 30 multiplied by 10 first, you get 300. So 750 divided by 300. The number that you get back, that's going to be your lot size. Okay? So you can reluctantly tell me all clear and we will get started. All right, let's get into this. All right, I'll repeat. So for the sake of what we're doing, probably over the next 20 minutes, everyone on this call is going to have $250 in their account. This is we're simulating what we do over a week, a period, a trading week, 5 days. I will be sending you guys 10 trades. You do not have to take every trade, right? If you take all, then you will see how many you won, how many you lost. I have it set up that these are randomly selected, that some are going to win, some are going to lose. You're not going to know. But for the sake of this call, just decide if you took the trade or not. If you took the trade and it lost, then you're going to lose. If you took the trade and it won, then you win. Okay? By the time we get to the boot camp, I'm going to have this cleaner so that it teaches you a whole lot more. But for now, just decide if you're going to take the trade or not. And if you do take the trade, try to calculate what the lot size is going to be. All right. Oh, what's going on? All right, here we go. Trade number one. Trade number one is a buy limit. All right. So remember what I told you, for the buy limit, current price is the blue dot. The order is going to be at a better price, which is below. And then we're expecting it to go up. All right. So our stop loss, 25 pips. Take profit is 50 pips. Do you want to take this trade? You could type it in the chat or you could write it in your book, whichever. All right. But once you have it, once you made your decision, once you made your decision, put the number of the trade in the chat. I think that'll be the best way to go. So this is 1. If you're taking it, just put a 1 in the chat. All right. So if you're here to just figure out if you can calculate the lot size, I want you're going to write $7.50. Then you're going to put the stop loss, which is 25. So this is going to be 25 multiplied by 10. So $7.50, 7.50 divided by 250. All right. All right. We give this a few more seconds. At 7:40, we're going to move to the next trade. All right. Remember, you don't have to take every one. So $7.50 divided by 250. You can write down what the lot size is. All right. Cool. Now, remember what I mentioned earlier at the beginning? This trade is going to give you 6%, right? Remember what your account looked like in 30 days. All right, this was a 6% trade. All right, moving on. Trade number 2, a sell stop. All right, we're looking for the price to continue going down. Blue dot is where price currently is. We enter when price drops, and then we keep going down. All right, trade number 2. If you're taking this trade, put a 2 in the chat. If you're just calculating the lot size, same thing. Your risk per trade, all right, we have $200, $250. Our risk is 3%, which is $7.50. So $7.50 over 25 multiplied by 10, 750 divided by 250. $7.50. So 7.50 divided by 250. That will tell you what your lot size is. If you took the trade, drop a 2 in the chat. All right, Sharon, good stuff, good stuff. All right, good stuff. All right, just so your guys are keeping track, all right, our max risk for the day is 9%, all right, which means you can take 3 trades. That is your max risk. If you're practicing good risk management, you're going to be at 3 trades or less. All right, moving on to the next trade. This is a buy stop. All right, the first setup that we had was a buy limit. This is a buy stop. The blue dot is our current price. We're expecting price to increase in value and then keep going up. All right, this trade, we're risking 3% and we're going to gain 3%. So some decisions are going to be made here. The first 2 trades, you were going to get 6% if it played out. You have a decision. Is this trade going to be worth your time? Is it worth risking $7.50 to gain $7.50? Or did you prefer the first 2 where you risked $7.50, but you were going to gain $15? All right, Carl took the trade. Georgia, you went back and took the second one. I don't blame you. I do not blame you. All right. I'm going to move on in about 30 seconds. Y'all going back and taking old trades. Y'all are late. Don't worry. I'll allow it for now. I'll allow it for now. When we get to the end, I'll explain what's happening. All right. What? I'll explain what happened if you get into a trade late. All right. 3, 2, 1. This is the end of the first day. Congratulations. You guys took 3 trades. Awesome. Tuesday. Boom. Trade came out. This is a sell limit. Right? Blue dot is the current price. With the sell limit, we expect price. We want a better price for a sell. So we're expecting price to increase in value first, give us our entry, and then drop. All right, this is a sell limit. If you're taking this trade, this is day 2 now. This is Tuesday. If you're taking this trade, go ahead and drop your 4s. All right. All right. All right. Calculated risk. I respect it. I respect it. Yeah, I'm gonna work on this though. I'm gonna work on this because what is ideal is you guys have better information. Right now, we're just guessing, right? But the next version of this particular activity, I would include some market structure, right? So even though it's a good risk to reward, you would see if it's more likely to play out. All right. But we're gonna keep it moving. Remember to put your lot sizes in though. Right? Remember to do this. All right, trade number two. Whoa. Hold on. Trade number two. Well, trade number five. Second trade on Tuesday. Let's see if you guys take this one. I really have a lot of 1 to 2s in here. This one is a buy by market execution. All right. This means that you want to get in the trade immediately. All the other ones, you're going to wait a little bit, but this is happening right now. All right, Ronte in the trade. Got you. All right, 20 more seconds. Let's see if anyone else takes this one. Right? When you guys keep track. 10 more seconds. 5 more seconds. And done. Tuesday is done. We're now on to Wednesday. First trade of the day. Whoa, whoa, whoa. Come on now. Can't be showing out all of my goodies. All right. We paused? Yes. Wednesday, first trade of the day. All right. This one is a 1-to-1. Sell by market execution. Right. We are looking to sell immediately. We're not waiting. We're getting to the market right this second. If you're taking this trade, go ahead and drop a 6. Ronte, you want to take this trade? You sure? All right. Risking $7.50 to gain $7.50. All right. Fonda's taking this one too. Y'all playing the numbers game, huh? 10 trades. You're going to take them all. Let's go. All right. 6. If you're taking it, give me that 6. Remember to calculate your lot size. You're going to put $7.50 at the top. 25 by 10, 250. So 7.50 divided by 250. That's the lot size that you're going to be using on your account. All right. 5 seconds. It's your fourth trade. All right. Good stuff. All right, let's go. Thursday, first trade of the day. Look at this one. Market buy by market execution. Risking 3% to gain 15%. This trade is a monster. This trade is amazing. Dawn is in. Fonda is in. Tranisha, Camille. Tricia is in. Let's go. Sanchi is in. Junior, you take back 6. No take backsies. No take backsies. Bernadette is in. Raquel is in. Pretty much, I should just say everybody on the call is in. I feel like that makes sense. All right. I mean, like, if you knew this was coming, would you have taken any of the other trades? I mean, you don't know what the outcome's going to be. But here we go. All right. 20 more seconds. And then there are no double entries. All right. Don't tell me you enter in this trade twice. As fun as that would be. All right, 3 seconds. All right, done. Trade number 2 on Thursday. Will you take another trade on Thursday? Or will you be satisfied? Who knows? Maybe you got 15% already. Maybe you hit 3% stop loss. I don't know. Trade number 8, Thursday. Trade number 2 on Thursday. Anybody taking it? I'll give 20 more seconds. $20 more seconds. Like this is a 6%, right? You're risking $7.50. You're going to gain $15. 3 seconds. And done. Friday, trade number 1. Buy stop. You see the diagram of the buy stop? We're currently at the blue dot. We expect price to increase in value and then continue going up. All right, I see some discipline in here. Love to see it. And yes, if you guys were thinking it, I will be using this tool to give you guys homework in the chat. Random pop quizzes, just to make sure that we are learning as a community. And for my brand new people, I hope you guys are taking some of these trades as well. All right. Tian, did you take any trades yet? All right, 5 more seconds. How do you know how much percent the TP will be before taking the trade? Oh, all right. So, okay, that is about the move, how to measure pips. All right. So, oh, that's a great question. So, when you're measuring pips on a pair like Euro USD, right? When you're measuring the pip is the 4th digit after the decimal point. So, in this case, the 0, right? This is going to be the pip. So, we're measuring the distance, how many pips it took to move from 0970 to 0945. All right. So because we started at 70, the stop loss is below that. All right. And to get, all right, 70 is the green line, right? 70 is the green line. 0.0970, that is the green line. The stop loss, let's treat the blue dot as the stop loss. Okay, so now we are at 70 and we are going down until we reach 25. So if we drop from 70 to, if we drop from 970 to 960, we dropped 10 pips. If we drop from 960 to 950, we drop 20 pips. If we drop from 950 to 945, that's going to be 25 pips. Let me know if that was clear. Yeah? All right. So when we are taking trades, our stop loss, what we're willing to risk, is always going to be equal to that percentage that we said we wanted to risk. All right, no worries. No worries. All right, so our stop loss is always going to be equal to the percentage that we're willing to risk as a principle. So if we're risking 3%, whatever the stop loss is, this stop loss could have been 10 pips. We're still going to lose $7.50. It could have been 30 pips, still going to lose $7.50. It could have been 50 pips, still losing $7.50. All right. But remember, when I spoke about the lot size, remember this calculation here? The lot size is going to change depending on what your stop loss in pips is at the bottom. So if this was 30 pips, right? If your stop loss was 30 pips instead, this would be 7.50 divided by 30 multiplied by 10. For this whole call, we were doing divided by 250. All right. But if the stop loss changes, your lot size is going to change. But when we finish, when we get to our 10th trade, I will show you what that lot size difference can make. All right. So where were we? I think this is Friday, first day. And Friday, last trade of the day. Last trade of the day on Friday, sell by market execution. This one has a 30 pip stop loss. Let's go, Camille. Don't sleep. Don't sleep. I'm taking this trade. Ronte is in. All right, 10, 10, 10. 5 more seconds. Tion, you can take this trade. Take this trade. Just take it. Take the trade. Awesome. So that's 2 trades for you for the week. That's good stuff. That's awesome. You don't need to take everyone. Alrighty. So everybody's good. Did you guys calculate your lot size on this one? If you did, is the number different to when it was 25, or did you get the same number? All right, I just want to see if you notice anything different. All right, so let's move forward. We're going to go into results now. We're going to be finding out if the trades that we took, if we won them or not. Boom, trades that hit tape, stop loss. If you took trade number 1, stop loss for you. Trade number 1, 3, 4, 5, 6, and 8. All of those hit stop loss. Sorry, I apologize. So if you're keeping track, we took 10 trades. We lost 6. Let me know how you guys are feeling. Let me know. Do you think your account is going to be positive or negative? Right? You took 5, you took 7 and 10. Ronte, you're looking good. You lost 1. You took about 6. Good thing. Good thing. All right, guys. You only lost 1? Sweet. You lost 4 out of 5. That's no problem. It's no problem. Lost 1 and 4. That's all right. This is going to show you guys the importance of risk management, right? And also being consistent. Yeah. So, first thing, everyone on this call could have taken all the trades. Here's why. There was no day during the week that more than 3 trades went out, which means you would have been within your proper risk management. Okay. Monday had 3 trades. Every other day pretty much had 2. And then I think one day had 1. Trades that hit take profit. Right? If you took trade 2, congratulations. If you took trade 7, congratulations. If you took trade 9, congratulations. And trade number 10, balling. Tion, shout out to you. Shout outs to you. All right, so let's see what our account looked like after losing 6 trades and winning 4. All right, here's what we got. We lost 6 trades, or well, I lost 6 trades. All right, so if you took the maximum of these 10 trades, you would have lost 6. That would have been minus 150 pips. You would have been down 18%. But the 4 trades that you did win, that was 345 pips. All right. You just grew that account by 39%. So your overall growth was 21%. That's still good. That's still good. All right. So overall growth is 21%. That would mean that taking 3%, let's say it was 3% every day. Remember the initial goal, you want to grow your account by about 3% every day. This is if we had 7 back-to-back wins, is what that would look like. So your 250 would have grown. I thought I had another slide. But yeah, that's that. All right. So let me see. For pretty much trades 1 to 9, can someone tell me what was the lot size that you got? When you did the calculation, what was the number that you got? It would have been a number with a decimal point in it. 750 divided by, right, 0.03. All right. Now let me put that into context for you. In the world of Forex, when you're trading, right, these lot sizes, that is what allows small players in the market like you and me to have some weight. Let me actually pull up this document. That's the first thing that you see when you go into the academy. So I'll share my screen in a second. Lot size. All right, here we go. All right, so your lot size, let me show you what that looks like in dollars. So your lot size, right, it was 0.03, right? And the lot size is what we use to help calculate our profit. So that's going to be the number of pips that we gain multiplied by our lot size equals our profit. So 0.03, that is going to be 10 cents for every 0.01, right? That's in the micro lot realm. So every 0.01 gives you 10 cents. So that means in those trades that we took in trade 1 to 9, we were gaining or losing 30 cents for every pip of movement. All right. We were gaining or losing 30 cents. Let me know if you're following me so far, drop an AC. For trades 1 to 9, where our lot size was 0.03, we were gaining or losing 30 cents for every pip. So when our stop loss was 25 pips, 25 by 30 cents is $7.50. If our stop loss was 10 pips, right? If anyone wants to do that calculation real quick, if our stop loss was 10 pips, let me know what our lot size would have been. Sorry, not our stop loss. If our take profit. Yeah, if our stop loss was 10 pips, let me know what the lot size would have been that we could use. $7.50 divided by 10 by 10, which is 100. So $7.50 divided by 100. Let me know. $7.50 divided by 100. Right. 0.75. So now we're gonna ignore the 5, right? Because the first two decimal places, that gives us, well, there's 75 cents. Okay. So we get 75 cents. 75 cents for every pip. So now imagine if your trade, the stop loss is still $7.50 because we have that 10 pip stop loss. However, if our take profit was 50, we are now gaining 75 cents for every pip. So we will have 75 cents by 50, and 75 cents by 50. That's a little over $35, somewhere between 35 and 40, maybe. Yeah, $37.50, right? So the take profit didn't change. All that happened is we had a smaller stop loss, right? A smaller stop loss means that our risk got reduced, right? We're not risking as much. But because we're using percentages, numbers work out a lot better. Don't worry if you don't get it right now. It's a whole lot of math, right? And you don't need to be good at math. You just need to be good at money. All right. So in those trades, instead of getting $15, right? If the stop loss was 10 instead of 25, that same trade you could have gotten $37 instead of $15 because you had this larger lot size. All right. So I'll leave that there. So that's where the importance of those lot sizes comes in. All right. So that was a 50 pit play. But for those that took trade number 10, where the take profit was 120 pips, right? Multiply that by the 75 cents. Let me know what you get there. 75 cents by 120. What is that? That is, right? $90? Are you okay? Like, if it went bad, you would have lost $7.50. If it went good, you got 119. Yeah, awesome. I use my phone as my camera, so I can't do my calculator thing. Right? But could you imagine that you're risking $7.50 and you're able to gain $119? That is crazy. But it's possible. Right? As you get deeper into the education, you're going to be able to do this on purpose. But the principle here is this. We call it risk to reward, right? The ratio. When the ratio is better, you make more money. So if the trade says that, if you're risking 3% to gain 3%, that's okay. That's the minimum. That's the bare minimum. But if a trade comes out and the risk to reward, right? The risk is 3 and the gain is 6, that's better. You have to lose 2 trades to get back to 0. If the reward is 9%, you have to lose 3 trades to get back to 0, right? It's giving your account time to grow, and it's making it take a longer time to get to 0. All right. So as a principle, if for no other reason, you want to learn how to calculate pips so that you can tell what the risk to reward is going to be. All right. And if that clicks for you, you can give me AC in the chat. All right. Good stuff. All right. So that's essentially what I wanted to take you guys through. We covered a lot. I don't know if it felt like we covered a lot. You could let me know in the chat if this felt like a lot of work, or was it a little exciting to see these hypothetical trades come out? You're taking them and you don't know if you're going to win or lose. Oh, before I forget, you guys realize that we were profitable, but we lost 60% of the trades. If you took them all, you lost 60% of the trades and you were profitable. You won 4 and lost 6, and you made twice as much money. It's insane. The reason why that was possible is that those setups that were above the 1-to-1 ratio, right? The reason why we were able to be profitable is because of, where is it? These right here, right? All of these trades gave you a profit that was more than a stop loss. Could you imagine if this trade was 25 pips and this one was 25 and this was 25 and this was 25, you would have made $30. $30. That would have been it. We would have been down bad. All right, I will upload it tonight, which means you should see it tomorrow morning. All right, so this is 15, 30, 45. All right. By using the same risk, right? By using the same risk, we knew what our loss could be. We were consistent. You can see on this screen. It's only $7.50. We didn't lose any more than $7.50. But if you change your risk, right? If you change it, then it's going to impact your the profit as well. Right? So on this end, let's say this was you lost the first 2 trades and you're like, this 3% thing is crazy. I don't want to lose $7.50. If you change that to 1%, right? Then instead of, I'll do that on another day. I'll do that on another day. But pretty much, if you change your risk, it's going to impact your profit as well. All right? It's going to impact your profit. Alrighty. Perfecto. Good stuff, guys. So yeah, it's a lot of perspective. But to recap, I took you guys through what risk to reward means, right? This is also in the academy. It's in the Run the Play University. It's in there. But risk to reward, that's pretty much the relationship between what you're going to lose and what you're going to gain. I think you guys have a good understanding of that now. We also went through order types. The market execution, which means we get into the trade right this second. The limits, which means we're waiting for a better price. If it's a sell limit, the better price is above. If it's a buy limit, the better price is below. Then we have the stops. With the stops, price is going in one direction and we want to get into the trade and continue in that direction. A buy stop, price is going to be going up. When it gets to a certain level above, we want to get into that trade and continue going up on that ride. If it's a sell, price is already coming down. We want to get in a trade at a lower price and continue going down. All right, so we had those order types. We know the formula to calculate a lot size. All right, the formula is going to be your risk in dollars, whatever your risk is. So our account is $250. Our risk is 3%. Therefore, our risk is $7.50. If our risk was 6%, right? If our risk was 6%, then it would be $15 over stop loss multiplied by 10. All right. And that lot size, that is the multiplier. That's what tells us how much we're going to be paid. All right. So we did a lot of stuff. Hope you guys found value. I had fun. Is 3% risk the standard? If so, my count is 500. Risk is $15 per trade. 45 mass. Yeah. Um, that's what I like to teach so you can see your account grow. 1% would be pretty slow, 2% is a little better, 3% is that like a decent sweet spot where you make some money, but it's not as slow. But yeah, your calculation is correct, right? You'll be risking 15% per trade, with a max loss of 45 dollars, right? But what we also teach in the academy, you're going to learn how to manage your trade, right? Managing your trade just means as you like if you go into the chat, you actually let me see if I could pull that up. Does anyone say that? Sometimes in the trade, you will see one of the educators say, "Hey, our trade is in X pips in profit. Move your stop loss to entry." Right? Or they might say something like, "Reduce your risk." So what that would mean is you could be in a trade right now, right? You, all right, no problem. Right? You could be in a trade right now. You're in profit a little bit. Your risk would be the original risk was 25 pips, but because you're now 30 pips in profit, you're able to move your 25 up to zero. That's going to mean worst case scenario, you lose $0. Yeah. So for now, as a beginner, you're going to be waiting for that update from the educators that are sending those setups on WhatsApp. As you get more into the education, you start practicing more, you're going to be able to do that on your own. Right. So even if you moved it from 25 to 15, instead of losing $7.50, it's going to be somewhere around $8, which is still good. All right. Anything below $7.50 is a fantastic day. Right? Because you were already comfortable losing 750. Right? Cool beans. I don't think I have anything else, but if anyone has any questions, I will give you guys 3 minutes to ask those questions, or we can close out the call and you guys can have a nap. Let me know. Any questions? Are we good? All right, perfect. Tion got that bag on that last trade, man. Where exactly is it uploaded? I upload to YouTube and then I just post a link into the chat. All right. I upload to YouTube and I post the link into the chats. My name is Kirk. Oh, you mind my name on YouTube? Uh, what is my name on YouTube? I don't remember. I really don't. I just upload it and just put it in a folder. Right. But I'll drop it into the chat. So look for that tomorrow. All right. With that being said, we are done here. All right.